Thank you very much. That was a bit of a mouthful, I'm sure. Yeah, good morning, everyone. And yeah, I'm delighted to be here today. Thanks for the invite from TUD to be here today. So yeah, and that very detailed introduction there. So I guess just a bit of a recap in terms of how I ended up in the sustainability reporting space, and probably more interestingly for people at EFRAG. So my background actually is in financial reporting, and I've worked in financial reporting for over 20 years. I am a chartered accountant, ACCA, sorry to the ACA people in the room. So yeah, in ACCA, so mainly in financial reporting. And one of my colleagues early last year saw an advertisement for EFRAG looking for secondees in kind, and kind of said to me, oh look, you'd be good at that. They're looking for people who have financial reporting experience and an interest in sustainability. So there wasn't a prerequisite at that point to know anything really around sustainability. So anyway, I met EFRAG, and within 2 days I was on their team. And I mean, it's been a baptism of fire to say the least, but a very, very interesting experience for me. And I guess at the end of my speech, I'll talk about where the opportunities are for accountants in terms of sustainability. So obviously that is one, you know, we can lend ourselves into the sustainability reporting space. And I guess that's what I've done. I'll talk a little bit more about that later. So I guess what can we say about the new regulation and all of the standards on sustainability? Well, it's been aptly named the alphabet soup. So TCFD, SFDR, CSRD, ESRS, and there's loads more. My focus is really on CSRD. But the reporting landscape is confusing, and working in professional services, we can see that. I think in January of this year, the world kind of woke up to CSRD, and we came back from Christmas, and ever since people are knocking the door down, wanting to know what they have to do and when they have to do it. And, you know, even on the consulting side, we're all trying to figure it out ourselves. But yeah, it's definitely complicated, but companies are starting to think about what they need to do around CSRD, in particular, those who have to report in 2024 and 2025. So that's the new companies coming in. In March, we ran a training event with ACCA actually, and we had 800 attendees at the event. It was around CSRD and the new ESRSs, quite a technical training session, but we did a little survey, so just have a few statistics for you. So 24% of participants in large organisations confirmed that they were familiar with the European Sustainability Reporting Standards. So that's only 24% of people that were in the room that worked for large organisations that they actually knew what ESRS was and CSRD was. 41% of those participants said that they had assigned responsibility for sustainability reporting within their organisations. So nearly 60% of people hadn't, and this is of 800 participants. Between 73 and 91% of organisations, so large being the 91%, small being the 73%, said they had made no provision for costs of implementation of ESRS or CSRD or other reporting. So it was quite scary and stark for us, but I guess there's the opportunity in terms of accountants and helping companies along with this work. I think given that there's 50,000 entities coming into scope, that was quite alarming for us, and that's probably why we're seeing a lot of people coming to the consultants over the last few months. So I guess, what are the basics of CSRD and ESRS? These have been touched on already, so I'll try and add a bit more of a practical spin, I guess, from working on the inside on EFRAG. And just to say, I'm not representing EFRAG here today, representing Grant Thornton. So CSRD obviously extends the scope of NFRD, the Non-Financial Reporting Directive, which was brought in 2018. And this brought the really large and listed companies into scope for sustainability reporting. So it was about 11,000 entities brought into scope at that point. The main difference between the CSRD and the NFRD is that now for companies reporting under CSRD, there are mandatory European reporting standards that they have to report under. So previous to that, anybody reporting under NFRD could choose a framework to report under. So they would use the Global Reporting Initiative, they might use SASB, that's the Sustainability Accounting Standards Board in the US. They might take the UN Sustainable Development Goals and map to those. So, or they might use a combination and then decide they want to do entity level disclosures that aren't mapped to those. So that's really the main difference, is that the undertakings that are in scope for this have to apply the European Sustainability Reporting Standards. They are mandatory and they will have to report under those standards. And some of those entities will have to begin to report from financial year 2024. So those reporting already under NFRD are first, and then the additional 50,000 entities come in. So what does it mean for undertakings in the EU? Well, for those already reporting, it's maybe slightly easier. So these are the really big, large and listed companies. They already have structures in place. They have their sustainability teams, they have reporting up and running, they understand their supply chain. They're already reporting under EFRAG. So they have to now transition to ESRS. So it's a detailed mapping and data review exercise. Really, that's their first step, and making sure that they comply with the standards of ESRS and add what they don't have based on what they're already reporting. For other undertakings, so the new 50,000, if they're not reporting already, some of them might be reporting voluntarily, they're really starting from the beginning. So for, under CSRD, so ESRS doesn't just cover disclosures around climate or metrics. It actually asks organisations to report on their sustainability structures, their governance models, their business processes. So they have a hierarchy that at the start, you have to outline how you actually govern your sustainability reporting process, and you have to report on that. So that's included in ESRS 2. So there's ESRS 1 and ESRS 2 are what they call the two cross-cutting standards. These are the new standards that are coming in. So they cover all organisations, and then you have topical standards under ES and G. So under ESRS 2, you have to report basically your structures around sustainability within the organisation. So that's going to be a big lift, I guess, for organisations who don't currently have those structures in place. And then you have your topical standards sitting under that. So already mentioned is the key concept of the double materiality principle. So this is new. As accountants and financial reporting people, we report using financial materiality. Now we need to look at the impact on people and the environment. So it's double materiality. And within that, you have to report your impacts, risks, and opportunities across that impact perspective. And you have to do that with your stakeholders. And that is outlined within the ESRSs. And you have to report how you do that, how you engage with them, what your process has been. So that's a big, I guess, chunk of work for organisations, is getting that structure up and running and understanding their material sustainability matters. So yes, it's a double materiality principle. It's obviously the really new concept here. And accountants traditionally looked at financial materiality. So I mentioned the first set of ESRSs, so they're the first two cross-cutting standards across all organisations, and then the topical standards across ES and G. So these are the first ones that have been issued by EFRAG. They're with the EU Commission. We should see them coming into law this year. Following that, we're going to have sector-specific standards. The EU has actually put a hold at the moment on the development of the sector-specific standards because the first set are the first to be implemented. They want EFRAG, alongside, I guess, local governments, to give undertakings more guidance on how to implement those standards. You know, they're very complicated. There's lots of disclosure requirements. I think there's around 1,000 data points within them. So they want them to be implemented first. But the sector programme is ongoing. It is ongoing at the moment. There's 10 sectors that are in draft, but there's no timeline for their release. The timeline was supposed to be between this year and next year for public consultation, but it has been pushed out and there's no dates confirmed for those. But with those, you'll see a lot more disclosures at sector level. I think an advantage of that is that it will allow EFRAG to work more in tandem with the likes of the Global Reporting Initiative and the ISSB to, work together with them to align those standards as they're released, because the ESRSs are ahead of where some of the other standards are in terms of development. So the sector-specific standards will cover 41 sectors. So there's a lot of sectors in there. I think SASB has 77, so that there'll be an alignment there with the ISSB, but 41 sectors, and again, quite onerous reporting standards there. And there'll also be a listed SMEs standard that will come out. It won't have a huge impact in Ireland. We don't have a lot of listed SMEs, but it'll be a light touch on the ESRSs for SMEs. So what does it mean for accounting professionals? Just to conclude, well, it means lots of opportunities and more opportunities, I would say. I think sustainability is a team sport, so everyone in the organisation has to be part of sustainability. It's your risk team, it's your board of directors, it's your finance function, but I think that the finance function have the ability to drive this. They have the skill set, particularly in the reporting side. Like, sustainability is a huge area, there's so many different parts of it, but on the reporting side, the finance function has the ability to drive that from the centre. They have the skills. They need to develop sustainability skills, but I think every organisation is going to have to develop skills internally on this. You might find somebody in the market to come and work for you, but it's a very difficult space at the moment, and we're all learning as we go. So I think upskilling is really, really important, and people putting their hand up and saying, I'd like to do that. It's much, I'm not going to say it's much more interesting. It's an interesting space to be in, and you can lend your skills into it very, very well. I think individually, it's a real opportunity for people to diversify, to do different things. I mean, I've done accounting work for a long time. I've got to do lots of different things in that time, but I definitely find this really, really interesting and bring your accounting skills into that space. And then really for organisations, like the EU have brought out these standards to drive change. That's the purpose of the standards, is to drive change. So you can have a real impact on people and the environment in a positive way. So I think for organisations, that's the opportunity. And that's it. So I think thanks again for the invite to speak here today on this really important topic, and look forward to the Q&A. So yeah, thank you.